I started Elevate Capital because I saw a market opportunity. And the market opportunity was investing in entrepreneurs that have a hard time raising money. And these entrepreneurs include women, people of color, entrepreneurs who are not necessarily in a major metro area like Portland, that might be outside, they may be in a rural region. Less than 4% of venture capital goes to women. Less than 1% to African American and Latino entrepreneurs and other minorities. And I don't see a difference in the quality of ideas, in the types of products that these entrepreneurs want to produce. They're just overlooked. And being one who was overlooked, I felt it was time to step up to the plate, because as an angel investor, I had already started experimenting with this and started investing, and I saw some great returns. So I wanted to be the first one to do it. I always wanted to be a doctor. And I actually started out as a pre-med chemistry major, and then discovered computer science and decided that that's what I wanted to do. And maybe later on, I'll become a doctor. I'll go to med school. And that never happened. I ended up in Silicon Valley at a startup, and that was it. Never went back to the original passion that I had for medicine. We're in very interesting times right now, politically, and it was kind of odd that, I was thinking about this and then the elections happened, and I don't want to make this conversation political, but, a large group of people that voted for the current administration were from those underserved regions or from rural regions that had lost opportunities, and their industries went away, their jobs went away. And I think it's very important that we target those people. We help create wealth amongst those people. And one way to do that is to support small businesses, to support entrepreneurial ideas, and be very intentional about it. It's so important for us as a nation, as a country, and even globally. You can't have this huge divide of really wealthy and really poor. And I think this divide has continued to grow. And I wanted to do my bit of impacting that in a very positive way. Well, Pacific Northwest is an underserved region as compared to other regions that have much more access to venture capital. So if you look at Silicon Valley, Northern California, Southern California, New York, Boston, even Seattle, even some parts of Seattle. So, I wanted to start in my own backyard because I saw an opportunity. And one of the funds, the Inclusive Fund, had a specific mission behind it, which was to actually intentionally invest in women and minorities that were in the Portland metro area in general. So it was largely driven by, let's start in our own backyard and, build some success. And then eventually, we're going to go national. We're probably going to go global. I've been involved in the Portland, Oregon Entrepreneur Community for quite some time. And for the last 10 years as a founding charter member and then president of TIE Oregon, where we really, focus on developing the entrepreneur ecosystem by both mentoring and investment. One of the things that is working now is that we have more capital for doing seed investments as compared to 10 years ago or even 6 years ago. And then as a result of making those seed investments, then as these companies are growing, they're looking for capital and they're getting capital from out of state. So that in itself is creating a thriving ecosystem where entrepreneurs feel that they can, if they start a company, that they have access to capital locally. That didn't used to be the case 10 years ago. So that's one dimension. The other dimension is there's a lot of young people moving in. So as people are moving here, the young people are moving here, and they're forming their own little networks, and they're running into organizations like TIE or OEN and other organizations. They're realizing that there actually is a ecosystem support that's available to them if they want mentoring and they want to start a company. And then they also, because we're a small city, access to resources is really fast. You won't see that in New York or in Silicon Valley. Very hard to break into those networks. And Portland's a little more open about that. I actually never wanted to be a VC. Many times people had mentioned, hey, you're a successful angel investor, people who are co-investing with you are making money, like, why don't you start a seed fund? I actually had sworn after my 25-year-old startup First Insight, where I raised a fair amount of money and then ended up buying my investors back, that I would actually never raise capital again, because I hate raising money. Because I know the challenges that are involved. And it doesn't matter who you are. It's hard to raise money. It's hard to convince people to write a check. But I got inspired. 3 or 4 years ago, I met this amazing woman, Ruqaiya Adams, who is an African-American lady who is originally from Portland, left, went to Stanford, got an MBA, got a law degree, worked in New York as in the investment field, and then came back to Portland some years ago. My 10-year-old daughter then introduced me to her at an event. And she said, Dad, you should talk to her. She's somebody. We had a brief encounter, brief meeting, and then a few years later, she joined Meyer Memorial Trust as their chief investment officer. And I was there presenting TIE. And after that, one thing led to another, and she pulled me aside and said, I want to talk about your next career move. And that led to a few more discussions. And they said, if you decide that you want to start a fund, we will invest. I just about fell off my chair, because nobody has ever come to me, ever, saying, I want to invest in your company. When there's money on the table, you think about it, and then you say yes. The most valuable thing that I've learned as an investor is it's not just about the money. It's about digging into somebody's passion and what they're passionate about, and supporting them through their entire journey. Being an entrepreneur myself, and having done what I've done for the last 25 years, I kind of have this knack of spotting entrepreneurs that have that kind of passion and drive and commitment and so on and so forth. And just seeing them grow and thrive, and then actually become successful, and then they repeat that virtuous cycle of what I'm doing, that's very gratifying. In terms of the obstacles that startups have, at every stage, there are tremendous obstacles. The very first obstacle that an entrepreneur who's just very, very early is, does the idea even work? There are entrepreneurs who come in and say, oh, I got this great idea, and I've done this and I've done that. But they don't know anything about customer validation. They think their idea is the best idea, and they've intellectualized it. They've somehow theoretically, or in a sort of a bookish way, saying, hey, if I see value, everybody else is going to see value. So I think that's the number one obstacle, is to get enough people interested in doing the work that's necessary. It's not just about the money raise part. Money raise part actually becomes easier if you have done that work. And it's not even the money they personally have put in. Their skin in the game, and a lot of entrepreneurs come and talk to me about this, and I said, you need to have skin in the game. Well, I don't have any money. I'm like, that's not what skin in the game is. Skin in the game is, how much upfront work have you done to validate your idea, to build some kind of a model? Who have you talked to? What research did you do on this idea before you went in and built the product or prototype or MVP? And how many people did you talk to? Who did you survey? Have you looked at your competition? So entrepreneurs that do that kind of work up front, and we teach this in the TIE Excel program that we have a better chance of becoming successful. Numbers, understanding financials is extremely important. When I started my company, I spent a fair amount of time actually learning about selling and learning about numbers, because I was an engineer. So I think that, to me, is the biggest hurdle. Then the funding comes. The biggest value that we provide is our own expertise, our mentoring, our experience, my own personal experience as an entrepreneur for 25 years. I've gone through so many cycles. I've gone through a lot. I've also invested now in over 50 startups between funds, individual, all of it. So all that experience comes in play with all of these companies that we're investing in. We're spending a fair amount of time coaching and mentoring them, especially the ones that are coming to us asking for help. In addition, we have this whole network of Thai angels, Thai charter members, and also we have connections to resources that they can hire. It's very important to have a team, and we do get involved in recommending people that might want to join the company, and we've got a pretty good track record of doing that. So there's a lot of value that we bring in, and then at the end, when you have to exit, that's where the real value comes. Because first-time entrepreneurs don't have any idea of how to get there. And because we've done a few of those, I think we provide some very special and meaningful help in getting them to the next round of funding. And, returns are important. And we're all about quick returns. We're about smart money, fast money, get in, get out, add the value to that first stage, and then bring another funder or another company to help that entrepreneur go to the next level. So we're seed funders, and we're just militant about that. And we're focused that that's where we provide the value in that very early stage of the growth of these companies. So RFPIO was in our first cohort of investments that we made, and I met Ganesh even before I launched the fund. I met the CEO at a Thai event where he came to pitch, and you could just sense his passion and his drive, and it was very infectious right from the beginning. So we took a meeting, and in 5 minutes I knew that I was going to invest because of not only just because of who Ganesh is as a person, but the problem that he was trying to solve. It's basically an RFP automation software as a service, and it helps salespeople, people who respond to RFPs, be able to do that in a very efficient way. And it's a fabulous product, and people who use it absolutely love it. And it's a huge market, and it seemed like that they just had hit the nail on the head in terms of a product market fit. And he's an amazing salesperson. And I think that what differentiates him from other entrepreneurs. And he was just so focused in selling. But he has a way of pulling people together with him. And that's an amazing strength. So it's not surprising that Ganesh would raise a $25 million round at an enormous valuation in 18 months and get us an almost 10x return. And the return was so rich that we decided that we wanted to get out and let his next investor take him to the next level. Because when there's that kind of money on the table, and being a first-time fund manager, he just hit the nail on the head on all fronts. Early exit, growth rates, 1,000% in a year, building a team, being responsive to the board, being engaged with the board. Was a phenomenal experience, and it all happened in less than 2 years. So really proud of that accomplishment. So TIE actually stands for the Indus Entrepreneurs. In Oregon, we call it the Inclusive Entrepreneurs. It was started about 25 years ago by entrepreneurs who were of the Indian diaspora. Most of them came to the US as students, graduate students, with like $20 in their pocket, and got an education and then decided to stay back. And were mostly engineers, mostly technical people, a lot of them in Silicon Valley. And, they faced the same challenges as what I faced, the glass ceiling, right? But they broke the glass ceiling and were able to raise capital, become successful, take their companies public, and create wealth. And one fine day decided that they wanted to give back, not to just their own community, but to this country. So they created this organization, TIE, and the objective was to help the next generation of entrepreneurs become successful. They started with mentoring, and just in a few years, the founders started investing. And then the organization grew like a weed. So starting in Silicon Valley, and 10 years later, they're in over 20 countries and 60 chapters. And we started the Oregon chapter about 10 years ago. And I was one of the founding charter members, and I was on the board. And as immigrants, we understand the challenges of, creating a business. And we also have a disproportionate amount of entrepreneurial spirit because we've got to make it. Nobody's going to give us a handout. And that's what I love about the United States, is that nobody gets a handout. You've got to work hard, and that's the history of this country. So think of TIE as a organization of immigrants with an immigrant attitude that's just seeding this idea of, germinating ideas of entrepreneurship, invention, creating companies, and we want to support them both from our time. So we're a nonprofit, so we don't charge for our time, and at the same time we also invest. So that's what TIE is. So if you're an entrepreneur or a wannabe entrepreneur or a first-time entrepreneur, this is the best organization to come in because you'll find people who are like you, who think like you, who want to help you be successful, and then, pass that gene on to somebody else. Going to people and presenting them the idea of investing in underserved entrepreneurs is a very, very difficult thing to do, to convince them. Because the first question they say is, well, why would you do that? We should just invest in everybody. And well, that's high risk because there's no track record here. And sometimes people won't even tell you anything. That's what I call the unconscious bias. Like, I'd rather invest in somebody has a broader reach. They're investing in the entire country, or they're not so limited to Oregon or Portland. Like, how big is Portland? Where is the deal flow? There's so many people who came to me and said, don't do the inclusive fund. There is no deal flow. It's so risky. Why would you take money from the government? You're going to get bogged down in political stuff. And I overcame the challenge, but it took me 2 years to close my funds. But it was worth it because as soon as I got that first check, I started making investments and immediately started seeing a pipeline of women entrepreneurs and underserved entrepreneurs. And nobody has that pipeline in this town other than me. And they come to me first because I'm intentional, and they know that there's money for them. And when you tell somebody and look in the eye and say, you know what, I have money for you, obviously you got to prove yourself that you're worth the money, they just light up. It takes the weight away. And that's why 70% of my portfolio is women entrepreneurs, because I didn't go out seeking them, they came to me.